Hello and Happy New Year. We've seen some retracement down on risk assets since mid-December, yet we believe there's one more leg up towards February. We will first start with the hourly chart of the 10-year Treasury Notes contract. We could see that since mid-December, it has initiated a correction up. That means that yields have initiated a correction down. We can see that the targets have been met and that we're slowly getting towards a point where our envelopes are almost touching each other and that we're slowly getting into overbought. Looking at the 3D picture, or the picture over 3 investment horizons, with a weekly chart here for the perspective over the next few quarters, a daily chart for the perspective over the next few months, and the hourly chart we just saw for the perspective over the next few weeks, we could see that the medium and the long-term trends are still heading lower. The weekly chart is in a correction down, and we could see that we're close to the support given by this correction down. If we were to make it below it, the downtrend would confirm an impulsive move down with much more potential to the downside for bonds. We believe this is possible towards the second half of the year. But at the moment, we've reached our corrective targets down. There's still a bit of more time to go in this correction. And if we now switch to our daily chart, we could see that there's possibly 1 or 2 more months to go down in this correction since the month of July. A bit more target potential, probably 2 to 3%. And we believe the inflection point for a new correction up could be towards the month of February. Now, within this, we could see here the correction up we've just had on the hourly, which has pretty much fulfilled its targets, and we may be ready to resume the downtrend down in sync with the daily. So at the moment, we would consider this as an intermediate bottom, as is written here on our 3D positioning, and as the medium term and the long term are still heading down, once the targets are fulfilled, there's risk that we could resume the downtrend. Now switching to gold, we'll have a similar analysis. We could see that it's been also correcting up since mid-December and that it has now reached its impulsive targets up on this hourly chart. So that's the perspective over the next few weeks. Now looking at the 3D picture, again a weekly, a daily and an hourly, the weekly is in a very weak correction up. And we can see that this correction up, which initially started late 2015 until July 2016, has almost fully retraced. That said, it is slowly getting into oversold again. So at some point over the next quarter, we believe it can make a bottom and correct up quite significantly. Now looking at the daily, we could see that it is still in the downtrend and that is also here possibly another month or so to go. We've already been oversold once, but we believe we could see a second oversold condition. We would also time this towards late February, possibly early March. Now in this downtrend, you could see the correction up that we monitor here on the hourly chart, and that the correction up has fulfilled its price objectives and is slowly getting overbought on our risk index and at stress with both our envelopes touching each other. So here, at the moment, with quite a weak uptrend, still a daily downtrend, and an hourly correction up that has fulfilled its target, there is risk that we could now resume the trend down in sync with the daily. Now looking at the euro, a similar picture, yet weaker. We haven't fulfilled our hourly objectives here. We could possibly go up to 108, 109, but we do have a bit of doubts that we could really achieve this. Indeed, the risk index, which had been moving up quite nicely, seems to possibly be rolling over the next week or so. Now, if we look at the 3D analysis, we also have caution because both our medium and long term are still heading lower. Our weekly chart is already oversold, but it could still reach a bit lower than parity over the next quarter or so. And the daily chart is still heading lower. Our target is pretty much 101, and we would maintain that mid-February, early March target for a possible bottom on the euro. So we've had a weak correction up, and we believe that looking at the 2 other assets we've seen previously, that it could already be rolling over again to continue down with the daily. We now look at the Japanese yen, which is pretty much the reverse. Yen has been strengthening here since mid-December. The targets are not quite fulfilled yet, so there might be the possibility to move back below 113. But also here we would have some doubts, as we are already at stress on the envelopes. They're touching each other, and we are in the oversold condition on our risk index. So this is, again, is the hourly or the perspective over the next few weeks. Looking at the 3D chart, you can see that the weekly had a very strong correction down between mid-2015 and mid-2016, and that it's now trying to reverse this correction down. We believe it is in the process of actually doing so, and that the targets for the end of next year may be higher again, possibly with new highs in the 130s level. In the meantime, we're seeing a first leg up, and this first leg up doesn't seem quite over yet. We still have some price objectives, possibly above 120, and that could extend towards end February, early March. And this uptrend, we've seen an intermediate correction that we have monitored here on the hourly, and as said, although there's a bit more potential here, it is already quite oversold. So also here we would expect the dollar versus the yen to resume its uptrend, possibly for another month or so. Finally, we look at equity markets, and indeed also since mid-December, they've not done very much in terms of upside. That said, there's still a bit of potential up, possibly towards the very high 2200s, and we're not quite overbought yet. We've had two tops, some consolidation, but it's certainly not a trend reversal yet. If we look at the 3D picture, the weekly is still heading up. It is a bit extended in terms of its target, but it's not yet overbought. The daily still has the possibility to reach into the 2300s. It's not quite overbought yet either. And the hourly has been in a consolidation, and we believe that given the daily and the weekly, it could resume its uptrend for a last leg up. We would also time the top towards mid-February, early March. And that's it for today. Have a good start to your year. Thank you very much.